Superfund A, which is a fund managed futures fund, has actually returned 30% in 2008 when the index has lost more than, or the Sensex has lost more than 50%. To understand what this product is about, because it seems to have an inverse correlation with the Sensex, we've got Aaron Smith, Managing Director of Superfund Financial, joining in. Aaron, morning. Thanks for joining in. Could you explain what this Superfund product is all about and how it derives its inverse correlation with the underlying stocks?
Good morning. Superfund is a managed futures fund, so we have a diversified portfolio of futures markets, which is about 50% financial futures and about 50% commodity futures. So we're very highly diversified between stock indexes, interest rates, global currency pairs, about half of the portfolio. The other half of the portfolio is focused on commodities, everything from energies to metals to soft commodities like coffee, sugar, cocoa, rice, the different soft commodities. So it's a very diversified futures portfolio. And you mentioned that Superfund has an inverse correlationship with the stock market. That may actually be true this year. But if you look at the long run, the correlation is nearly zero. So we would say that there's basically no relationship from Superfund relative to Sensex or Nifty or any of the major worldwide stock indexes.
Now, I'm just trying to figure out your 2008 performance, because if you were long futures of any commodity or any stock market, you would have been down because no market or commodity has been spared. But your performance is in the positive. So are you short generally on many of these futures?
Well, you correctly identify the fact that we are trading long and short. In the futures industry, it's totally normal to take short positions as well. So as a diversified managed futures fund, we can benefit from the uptrends in the market as well as the downtrends in the different markets. So in the early part of the year, Superfund benefited from having long positions in energies like oil, natural gas. Then in July and August, reversals came in the energy markets and other commodities. We started to close some of those positions. And then as that actually developed into a downtrend, we started to make short positions in various energies and actually profit from that. At the same time, if you look at equity indexes, using futures contracts, we could actually benefit from the downtrend. For the most part in the past year, we've had short positions on various stock indexes, not in India, but like the S&P 500 or FTSE or DAX, Nikkei and Topix. We had short positions. But in October, we started to close some of those short positions due to the volatility, the extreme volatility in the market. We thought it was actually just safer to take profits.
Aaron, morning. So just to focus on that 50% for financials and equity market indices right now, what's the tactical position you've got going right now? Are you just flat for most equity markets, or have you started initiating longs on the markets or the indices that you just talked about?
We have not initiated long positions in equity markets. We're mostly in cash at this point, having taken profits from the October drops. And we will wait until there's a clear trend developing. So we would not try to speculate that this is a bottom. We would rather sacrifice the bottom and just start buying stock indexes once a clear rally has taken place and once a clear trend has developed. Then there will be a higher probability that the trend will continue. So we actually use a systematic approach. In other words, we're using technical analysis and trend following to analyze the markets. And we think it's important not only to know when to go long, when to go short, but also when to just be patient and wait for trends to develop. And that's more or less where we are today in the equity markets.
For everything else in terms of asset classes, Aaron, what are you most comfortable buying right now between T-bills and crude and base metals or precious metals?
Certainly, I think the best safe haven today is gold. We believe that gold can easily breach the $1,000 per ounce level in the short term, especially once the U.S. dollar has a correction. Gold can certainly go to $1,000 per ounce in the short run, sometime next year. But in the long run, if we look at, say a 2 to 3 year horizon, we believe gold can easily go to $1,500 per ounce and even higher from there, as much as $2,000 per ounce. Because actually, if gold were to double in price from where it is today, it would still be below its all-time high adjusted for inflation. So we think that gold is one of the best places for investors to protect their assets today. And unlike any paper currency worldwide, gold has a very solid value, which is not increasing because the amount of gold that exists on the planet today is stable. I mean, there's about $3.5 trillion worth of gold. Compared with the equity markets worldwide, which is about $29 trillion. We saw on January 1st, the Indian stock market had a market cap of around $1.8 trillion. Today it's less than $0.5 trillion. So a lot of assets have come out of the equity markets in India, but I think the average Indian investor probably doesn't even have the average Indian, I should say, doesn't own individual stocks, but many Indians own gold. And this is one of the reasons why India will emerge out of the financial crisis very strong compared to a lot of the Western economies that have borrowed so heavily.
Aaron, just a quick word on your fund. Is it a super HNI fund which only a few very high net worth individuals can access, or is the ticket size such that even relatively HNI people can invest in it?
Sure. Well, first let me say that it's a foreign fund. So it's an opportunity, it's a diversification opportunity primarily for NRI, non-resident Indians, HNI, or various corporations. The investment minimum for Superfund is only $5,000, which I guess is like 2.5 lakh rupee, which around that area, it's not too high of an entry point, but it's under the limited remittance scheme where Indians are allowed to invest up to $2 lakh per year overseas. And so this is really the opportunity. So whether you're an HNI or a super HNI or just an average investor, I think anybody can really benefit from diversification. If you take 5 or 10% of your assets and put it into a diversified managed future strategy to supply growth for your portfolio, and then on top of that, take positions in gold as a capital protection feature, then you don't have to speculate if rupee will be strong or dollars will be strong. Actually, gold is the best currency. It was the main currency worldwide for the past couple thousand years. And actually today we think that gold will continue to be a good store of value in the future.
Aaron, good talking to you. Thanks very much for